Chapter 7, Accounting Information Systems. Accounting is more than simply recording transactions. Accounting should be thought of as a system that collects, records, stores, and processes accounting data to produce information that is useful for decision makers. For an accounting system to be effective, it must have several characteristics. Among those characteristics are control, compatibility, flexibility, relevance, and a positive cost-benefit relationship. Let's take a look at this first triad. Again, you're supposed to match the benefit with the appropriate definition on the right here. So first, for control, look through the definitions, and you see that it's C. Provides safeguards for business's assets and reduces the likelihood of fraud and errors. For relevance, you've got E. Provides information that will improve decision making and reduce uncertainty. For flexibility, it was B. Can accommodate changes in the business over time. A, works smoothly with the business's employees and organization structure for compatibility. And that leaves us with D, for positive cost-benefit relationship. Benefits received outweigh the cost of the system. Accounting systems also have to have several key components. Among those components are source documents and input devices, processing and storage for information, and outputs. In accounting, there are some types of transactions that occur frequently and are often very repetitive. Rather than record a series of nearly identical journal entries, it is more efficient to record those types of transactions in a special journal. There are 4 basic special journals that are very often used. You have a sales journal for sales on account, which typically would involve a debit to accounts receivable and a credit to sales. A cash receipts journal for cash receipts, which would show a debit to cash and a credit to various other accounts. A purchases journal for purchases on account, which would be a debit to merchandise inventory or whatever you call your inventory accounts, and a credit to accounts payable. And finally, a cash payment journal for cash payments, which would be a debit to some specific account and a credit to cash. In addition to special journals, many companies also use subsidiary ledgers. On the balance sheet, there is often an account for accounts receivable and an account for accounts payable. However, there is also a need to know the individual amounts owed by each customer and the individual amounts owed to each creditor. For example, the individual amounts owed by each customer should total up to the control account for accounts receivable. Here we can see that the individual subsidiary amounts owed to the company by Galvez, Harmon, Levy, and Schmidt total up to the accounts receivable main account, also referred to as the control account. If we used a journal entry to record a cash sale, we would normally debit cash and credit sales revenue. We would also debit cost of goods sold and credit merchandise inventory. Using a cash receipts journal, the amounts are added to the cash receipts journal and can all be seen in the same place. In this case, we can see where a cash sale for $517 was recorded on November 6th. The cost of goods sold was $290. On November 11, $1,000 was borrowed from First Bank. The amounts are recorded in the cash receipts journal with a debit in the cash debit column and a credit in the other accounts credit column. On November 14th, we record a $900 payment from Galvez. Galvez also took a $35 discount for early payment. The transaction is recorded in the cash receipts journal with $900 in the cash debit column, $35 in the sales discount debit column, and $935 in the accounts receivable credit column. Let's take a look at another try it here. With the purchases journal, we record all of our credit purchases in one place. Because it is easy to determine the total credit purchases for a period from this journal, we can combine it with cash purchases from the cash payments journal. Here, $700 is purchased on November 2nd and recorded in the purchases journal by entering $700 in the accounts payable credit column and $700 in the merchandise inventory debit column. On November 5th, $319 of inventory was purchased on account from Pioneer Plastics. We enter $319 in the accounts payable credit column and $319 in the merchandise inventory debit column. On November 9th, $440 of equipment was purchased on account from City Office Supplies. We enter $440 in the accounts payable credit column and $440 in the other accounts debit column. The cash payments journal is used for all cash payments. On November 3rd, rent of $1,200 is paid, so we enter $1,200 in the other accounts debit column and $1,200 in the cash credit column. On November 8th, we purchased office supplies for $61 cash. Enter $61 in other accounts debit column and $61 in cash credit column. On November 15th, $700 is paid to Haynes Textiles against an account payable to pay it off. Enter $700 in the accounts payable debit column and $700 in cash credit column. For this try it, how should Ficella's rent payment of $2,000 be recorded? The appropriate journal entry is the appropriate journal to use is the cash payments journal. Record $2,000 in the cash credit column and $2,000 in the other accounts debit column. In the account debited column, record that the cash payment was for rent expense. Most businesses use some sort of software-based accounting system. Software packages such as QuickBooks and Sage 50 are often used by small businesses. Larger businesses will normally use software like SAP or Oracle. Here are just a few of the characteristics of computerized accounting systems. They can create sales invoice, prepare a check, record bills, prepare financial statements, and various other reports as you see here, such as the accounts receivable aging summary, sales invoice list, sales by customer, vendor contacts, and bank reconciliations. Take a look again at this try it problem and see if you can fill in the blanks.